I closed the Euro USD long position that I had been in since Monday today, and it didn't even hit take profit. I'm going to show you the trade breakdown, why I took the trade, how I managed it, and more importantly, why traders tend to prematurely think that their problem is psychology when it is that they've really not understood how the market moves. Before we go to the charts, let me give you a rough sketch of what the Euro USD chart currently looks like. The whole of last week, Euro USD was consolidating inside a daily bullish fair value gap. If you go on the daily time frame, you see this fair value gap there. And my analysis was that we were finally bullish on Euro USD. So on Monday morning, all I was waiting for was for the market structure to shift bullishly on the 1 hour time frame, trading outside of the fair value gap. And I executed my position during London session on Monday. I had about a 50 pip stop loss, and I was targeting 1:2. Monday's candle rocketed to the highs and then started consolidating. This week we had one of those weird weeks where NFP is on the Wednesday instead of a Friday. Since I started doing, like, I count the number of times that has happened. And we know that during NFP weeks, the market tends to consolidate a day or two before the big news events. So the whole of Tuesday, market was just consolidating into Wednesday. Now I was confronted with a decision. Do I hold for my 2-hour target? At this point, the trade was in about 1.5 to 1.7 hour. Or do I account for the risk and the volatility of holding through NFP? Let's go to the chart to see how I handled it. This was my Euro USD trade. This is the daily fair value gap that I talked about. This is the consolidation that we saw last week. And this was the impulse that we saw on Monday. When we go down to the 1 hour, you can see that price swept out liquidity and then changed market structure, started making higher highs and higher lows on the 1 hour time frame. This was Asia. So I came to my desk on Monday morning during the start of London kill zone. And as soon as this big bullish candle printed, closing outside of the gap, I entered here and had about a 50 pip stop loss. And I was targeting just 2 hour, which is where this alert has been set here. But look at what happened. Monday traded high and I was in very nice profits, very close to my take profit. But then the whole of Tuesday started consolidating. Now, I am aware of this type of price action because I know that NFP weeks tend to be like that. The mere fact that I was bullish does not mean that all of a sudden I'm going to disregard everything that I know about NFP. So yes, I was hoping for price to hit my take profit, preferably before NFP, but I was well aware that I did not want to be exposed to the shenanigans that the market tends to post during NFP. I took a scaling entry. This green rectangle represents a 4-hour fair value gap. Yesterday, when retail sales was released, price swept out Asia low and took out the previous day's New York low. And when I saw this huge engulfing candle print, I went long here on the 15-minute time frame. My stop was some distance away around this line, and I was hoping to compound on my entry and get an even bigger profit if price eventually reached the take profit. Now, that trade was in profit around this morning, but when I saw that price was dilly-dallying, I just told myself, look, you know what? Yes, you might get 4 hour out of this trade if it hits, but now you're in 1 hour profit on the scaling and by 1.2 hour profit on the initial position. So I closed my position because I did not want to be exposed to NFP on the off chance that NFP would spike down instead of spiking up. Now, if NFP had spiked up, yes, it would have hurt, but I know it would have hurt way more if NFP had spiked down because not only would it have taken out my stop loss from the scaling entry, it would have slipped me and I would have ended up losing way more than I intended to lose. So tell me, which is better, a meager 2 hour profit or the risk that NFP spikes against your direction, which is what happened today. Now, the psychological problem of staying in a trade until NFP volatility kicks in is simply born of the fact that you have not been in the market enough times to see the carnage and the damage that NFP can cause you, which is why I always tell you, your psychological problem is going to be fixed with time and when you have a better understanding of how the market behaves. I'm Velos the Trader, and I'll talk to you later.